Namaste and welcome. I'm Pratim Ranjan Bose and you're watching my podcast, Perspective. At the outset, I beg your apology for long absence. The last full podcast I did was nearly a month ago. On the brighter side, it gave me time to rejuvenate my thoughts and redesign my approaches. From now onwards, I'll chronicle my thoughts regularly. There will also be blogs for those who prefer to read. Ideally, this should be the happiest times of the year here in India and large parts of South Asia, Southeast Asia, and Far East, wherever Indian or Indic or Hindu civilization has traveled or whosoever has come in touch with it. The month of October is auspicious in all Indic religions. Religious festivals of different dimensions are observed across India. Also, in Nepal, Bhutan, Tibet, Myanmar, Laos, Cambodia, Thailand, Japan, Korea, and Bali Islands in Indonesia. Indonesia was once Hindu, as you all know. They changed religion some centuries ago, but retained Indian cultural values. I recently met a professor named Vijayanto. It is a derivative of Indian Vijayanta. Unfortunately, such values are neglected in Pakistan and Bangladesh, which were part of India till 1947. Economically, India was rightly poised to celebrate this festive season. Our GDP is growing at great speed, ignoring slowdown in all major economies or economic blocs. We have not merely recovered from the impacts of COVID, but is out of the structural weaknesses created during the last boom between 2003-4 and 2008-9 for 5 years. The recalibration of the economy done during the last 10 years of Narendra Modi started yielding results. The change is visible in rising tax penetration, dramatic growth of digital economy, rising investment in technology sector, booming export of smartphones, military hardware, etc. India's energy sector has undergone a dramatic change in context and content, both on supply and demand side in these 10 years. In terms of solar mix in power, India is now ahead of both global and the US average. On top of all, we now have brand new transport infrastructure. The infrastructure creation is not over yet. Investments in infrastructure has been prime growth engine till 2023-24 fiscal year. It may remain so for some more years to come. However, in a major shift from the past, private capital expenditure has finally started rising. Private capex grew by a mammoth 42% in July-September 2024 quarter, ignoring high interest rates. One can only imagine how things will improve if India's central bank agrees to cut rates. As you are aware, the policy rates were increased from mid or early 2022 to keep pace with the inflationary pressure. On the job creation side, India has been witnessing sharp increase in campus recruitment and salary of fresh engineers from core disciplines of mechanical and electrical for last 2 years. According to a recent survey, the manufacturing job creation has been at 12-year high in 2022-23. I am sure we have created new records in 2023-24. That is the last fiscal year. However, considering India's thin share of manufacturing, the impact in overall job market was low. Including electricity, only 22% of India's GDP is contributed by manufacturing. vis-a-vis 40% in China. Excluding electricity and automobiles, the manufacturing GDP ratio is barely 8 to 9%. The rest is mostly services, particularly information technology or IT. And the recruitment in IT were down due to slowdown in overseas consumption centers. A mildly positive change in outlook in USA brought significant change in IT recruitment outlook in India in 2024. Latest projections claim that IT freshers hiring may double in 2024-25. To put it into perspective, this Indian growth story is distinctly different from the 2003-2008 boom, which rode on the dual engine of subprime-led growth in the US and export-led growth of China. Interest rates were rock bottom in those days, and the stock market was booming on FII or foreign institutional investor inflow. In contrast, Indian stock market is now booming at the support of retail domestic investors in mutual fund. The growth is largely domestic consumption driven as global exports are facing headwinds since middle of 2022. First, due to global slowdown and lately due to spike in maritime freight cost due to conflict in the Middle East. The Middle East conflict is now set to intensify, at least in the short or medium term. Crude oil prices have increased by 10% in the last fortnight. Ship movement through Gulf of Aden and the Suez were already disrupted. Now, the Hormuz Strait may be impacted. It may impact India's huge trade with Qatar, UAE, Saudi Arabia, etc. The impacts may be felt on a host of sectors, starting from oil and gas to coal, fertilizer, etc. True, a part of the consignment will be rerouted through the Persian Gulf, but there will be huge cost impact because the cargo will not come to the Gulf of Aden, through the Gulf of Aden to India, which is the closest route. It has to come all the way surrounding it. The Red Sea is impacted by the Houthis. The net result is probable inflationary pressure and a potentially longer wait for interest rate cut, which will hold back India's growth prospects. I am not expecting India's Reserve Bank of India to take the risk of inflation to fuel growth at this moment. And that is the biggest dampener in this festive season. The world has already paid very high price for both Russia-Ukraine and Middle East conflict. Many smaller economies, including Bangladesh, suffered. If the war escalates, they will be ruined. Thank you for watching Perspective. If you like this episode, please share and subscribe. See you next week. फिर मिलेंगे.